I'm gonna do this from the sales side, but essentially it's mirrored on the cost side as well, or the purchase side. So the first thing I'm going to do is just go in and put in a direct application. There we go. So what I'm going to do is I'm going to select my project from the list. So what screen we're using here is our applications ledger. Okay, and again, some people might be on the call that are on older versions of the software, and might be more familiar with our customer application screen. Okay, so we see this screen as kind of more of the future, the recommended way of doing it, and you'll see later on when we start to look at projects, it's replacing the application screen within projects and other areas. Okay, so what I'm going to do is I'm going to add an application onto the system. Okay, so it's a brand new project. We've got no cumulative, no history behind this.
Matt can't say cumulative.
I can't say cumulative. It's the word that I can't say, which I'm in the wrong industry for that, but you know, it is what it is.
It's fine. We definitely know what you mean.
Everyone knows what I mean. This word here. So what we're going to do is I'm just going to put in a simple application, say for £10,000. Okay, and what the system's going to do is it's going to go away, and by chance, this project that I'm choosing here has some default retention values on there. So what the system's going to do is it's automatically going to give me retention on this application. Now I can go and override this if I wanted to, make any adjustments, you know, to be more specific. But essentially what that's going to do is create me my application as a single line. So as Richard mentioned earlier, we've got this gross line here. Now, because we're going to be posting directly to the P&L, I could break that down into multiple lines that could potentially go to different revenue codes, and it's going to go to those straight away. So that initial posting is all going to be based on our gross values within here. Okay. For simplicity, I'm just going to keep it to 1 for the moment. Okay, so there are other areas on here. So we can see that we've got our retention, and all we're doing is saying we're going to reduce our gross value lines down by that retention amount. And we've also included that onto our discount side as well. So if I went and added 5% discount, this is going to create a discount line and reduce the overall balance of the application based on that discount value. Okay, let me just delete that line. Bring it back to where we want it to be. Okay, so in terms of our posting and our recognition of that initial revenue that's going to be posted, it's all going to be based on this application date. Okay, so the application date is the driver for essentially the journal that's going to be posted off the back of this. Okay, so we can specify valuation dates when we're expecting pay less notice date to be, our payment due dates. These are all there just for your references and reporting. In terms of the system, what the system needs, we just need the application date and really a value. Okay, so it's kind of up to the end user on how far you want to take this application. Some people like a good breakdown, some people just like a single line. Yeah. So when I save this now, and again, what we get this straight away is this prompt. Okay, and what this prompt is, we decided to add this in just for clarity, to give the end user essentially telling them what's going to happen in the background. I think what we found before is people were quite happy going on, putting on applications, making adjustments, doing this, that, and the other, and not really understanding what was happening in the background in terms of those nominal postings. Okay. So what we're saying at this point is, what's that journal going to be? Okay, so here we can see that we've got our P&L posting directly based on what we were specifying here in the nominal analysis, and then we've got our retention values and our application debtors control. Okay, and that's an application on the system. Okay, and behind that, that's when we're posting that P&L posting. if I just go to my nominal.
Just while you're digging into that, Matt, it's worth mentioning that in that scenario, we're assuming that the QS has already done his spreadsheet exercise. He's extracted the costs. He's done his work. He's run his spreadsheets and things they like to do. He's produced his document to the client and sent that off. And basically, what we're getting you to do here at this point is to register his application on the system.
Yeah.
Probably, if we're lucky, I guess you get it quick enough. You do that before the valuation. Sometimes it's done at the same time as the valuation is agreed. But that's the concept. Now you can create a basic application document with that information on it. But anyone who wants anything more detailed than that, you really need to use the the construction sales orders to give you the elements in it. But we find very often that people are saying that there's no point producing a document out of something like Sage because the QS changes at the client end. They want it in a different format. They want different information. And usually a spreadsheet is the best way to produce that, or have the flexibility to change it on demand when somebody requests some additional information. So I don't know if that's if everyone would agree with that. So we have some options to do some layouts, but I still think 95%, Matt, would you say, are definitely producing it outside of Sage and don't want to be forced to produce it inside of Sage.
Yeah, the method that we're showing here is really the front cover approach. There's a number of different methods out there. I'm going to go and take you through this sort of sales order contract approach and that big documentation. And we've been doing complex backing documentations on a report, whereas actually a spreadsheet is the way that you do. And trying to crowbar a spreadsheet off a QS is also a difficult thing to do, as I'm sure some of you can appreciate. So what we've got here is essentially our posting. Okay, so we've got our gross application going straight onto the P&L. Okay, and if that application wasn't amended, that doesn't move. Okay, and then we have our postings here, which is basically our control account. Okay, outstanding applications, awaiting certification. Okay.
Just in case anyone didn't notice, the dates on the retentions were a year apart. There was one for practical completion, which you could set on the project, and one for defects, which we've set, I think, as a year later.
Yes. Yeah. So, and again, it tends to be a discussion on what's agreed in the contract. Is it 3% flat? Is it a 5%? Half
which
on
we
defects.
split 2.5 and 2.5 in this case. Yeah, because people talk about 5% changing to 2.5. We've tried to make it a little simpler, and in terms of putting that in reporting and when things are due, putting these dates in. I think people have welcomed the concept, but it was a little confusing at the start.
Yeah, I think so. It seems to be adopted pretty quickly. They go, oh yeah, that kind of makes sense, and away we go from there. The way that we've got this set up as well, just while we're talking about it, is so I have this set up on my project as a default. So let me just load up my project, and under here, this is where I'm controlling my retention defaults. Okay, and actually what can happen is if the project's delayed and you've got your practical completion is not when you had originally specified because the project's overrun, we can come and update this date, and that will affect all the practical completion retentions with a new date. Okay, so it'll just roll them all on by a month, 6 months, however that extension is. Okay, just clean up after myself. So that's our application on the system. As Richard mentioned, it's the likelihood is it's been supplied. This is how much we're going to apply for, and it's keyed into the system with backing documentation. And if you're lucky, that's done before the certificate's been handed to you. But if that's not the case, then that essentially sits on the system as applied revenue, not certified, but recognized as revenue on the P&L. Okay. So in order when we come to add a valuation for that, or we refer to it as a valuation, but essentially it's the certified value of that application, we can essentially do that all from this customer applications ledger. Okay, so one of the things that is really different between the two is everything that we do on this screen is independent. Okay, so at the moment in this example, it's one application, one certificate. if you've got a number of applications and a certificate that could potentially cover that number, so it might be a little bit from one, a little bit from two, and so on and so forth. In this screen, what we've done is made certificates and applications independent, and we essentially associate them together via an allocation. Okay, so one of the things that again is kind of new, I can come in here and enter my certificate. I might say what our valuation date is. So this was done 2 weeks later as per the agreed, and then the payment is going to be made maybe the month after, same day. Again, depends on the agreement. But what we've got down here is a little button that says populate outstanding. And what that does is that presents us with all the outstanding values that are on this project. Okay, and what we can do is we can go across and go, okay, how much is being certified this time? Okay, it might be that we go back to our valuation screen and key in that data. But what it gives us is essentially a pre-populated list of everything that's outstanding on that project. Okay, so if I was allocating everything, I would just leave it as a default, but I might say, well, actually, we're already got certified at £9,000, and that's just going to create a certificate for £9,000 and move it on from there. Okay. So I can confirm that, and what that's going to do is that's going to go and back populate my valuation based on those application details that are there outstanding. We've got our deductions in there that are essentially based on the project defaults. For this, it's just a 1-for-1. But again, our posting now this time is going to be our date based on the valuation. Okay. So when I save that down, we again get a little confirmation prompt of our nominals. So we can see here that we're essentially doing a movement between our application debtors and our valuation debtors to see that movement between where that debtor value is. Okay, so there's our application on there, our certificate to say it's been certified. So we can see here that we've got applied for 10, we've got 500 retention. What's our net value? What's outstanding? Because at the moment we've got a valuation associated to it, but that valuation has not been invoiced, so we're essentially got an outstanding value to invoice, and then our £500 retention. Okay, so from here we could print our invoice, we can post our invoice, and we can post our receipt from the same screen, and it's all in that process. And again, this comes down to, you know, when do you print and post that invoice? Okay, does the application go on? Does it get certified straight away? Does the certificate come in later? And then when do we post that invoice into the accounts? Okay, so it might be that we go and print this straight away. Okay, so give ourselves a little printing date and an invoice date. We should get as the layout come up here. So as Richard mentioned, we can present an invoice layout. This is the very basic one that comes out the box, but gives our cumulative values, our retentions, you know, VAT, certain things like that. Obviously, I realise this is standard VAT, so the likelihood it's going to be sort of reverse charge or something along those lines. Okay. But from there, at the moment, we've got an application on the system, recognised as revenue within the P&L, and we've got a valuation on there. So if I go back and look at my nominal postings, the only thing we have now is those two movements. Okay, so in prior versions to what we're looking at here, you would have seen the application go on. Okay, and then we would have had the same again to take it off there, and then the same again to put it back on. We've significantly reduced that down by just doing that small movement on the balance sheet. Okay, and that's the kind of key point that I think me and Richard wanted to raise, to, you know, for those people on the older versions to move up to 21.1.22. Okay.
There's even a discussion that we could take those ones out later if you don't want it. We just put it in when you do the invoice, but you know, one step at a time.
One thing at a time. Okay, but in terms of what we're seeing on the actual sales ledger itself, we have no invoice on there yet. This is all held within the construction applications ledger. Okay, so once that valuation is printed, we can then post the invoice and the receipt. We can do that at once, or we can do it later. It can be done, you know, by someone specifically in finance, so we can remove permission on these buttons. So, you know, it removes it from being a finance process to, you know, potentially somewhere else where they're just putting on the application of valuation.
The reason we've left a step here is if you print the invoice, you realise actually there's a mistake on there. You can go back and edit that valuation and change some details or put some more text on, and then reprint it and then post it. In fact, I think the text is editable later, isn't it, as well, Matt? Because we had a few clients who said they've sent the invoice out and the customer wouldn't pay it unless it had some very specific text on it after the event. So we do allow you just to change the text box and then reprint it.
Yeah. So when you do reprint, we just say, do you want to use the old format or do you want to generate it and do it again with what the information is there on the system? Okay. It's going to print now. Okay. Okay. But for this instance, all I'm going to do is post that invoice. Okay. Posting's done and the invoice appears. Okay. So we now have an invoice on our sales ledger. So if I just load up my customer list and look at my transactions. Okay, so we should have our certificate in there right at the top. And if I go and look at my nominal postings for this, we can see that on here, we're not regenerating that P&L posting. We're essentially just controlling that movement out of valuation debtors into our main debtors control account within Sage. Okay. So from what we're looking at on the nominal history for there, probably seeing in waiting, is this line, more importantly, is not being affected. Okay, gross application recognized as revenue. All the other movements are all just done on the balance sheet to minimum. That's a question from Joey. Yeah, it's gross application value, I think is the question. So it's this value here. Presuming that retention is always going to be received, it's just withheld. Generally, when it comes to final accounting, that's when a lot of the adjustments are made, particularly when it comes to final agreements on retention values and final accounts.
You want to just pop open the project, Matt? Hannah was just asking, so the sales ledger account is updated. No, the sales ledger account doesn't get updated until the invoice is actually posted, just the P&L account. So we're recognizing the revenue, posting it to P&L effectively. You know, if it's year end, particularly, then corporation tax is going to be calculated based on, as HMRC suggested, on work done, on applications raised for work done. So the sales ledger only gets updated once the valuation is agreed and the invoice is posted, which could be after the event. Revenue would have been recognized earlier.
It was so quick, Hannah, that's why. I'll load up the screen again. So all I did was click this post invoice button and that created that invoice straight away. Okay. So going back to
if you run a TB at month end, debtors reconcile unless the invoice was posted in the same period. No, so okay. we have to go through them a step at a time. So the TB is still going to balance. So we're posting the application and posting to an application control account.
Mhm.
And then we're just moving from the application control account to the valuation account and then to the debtors, depending on what the so we're just keeping everything else on balance sheet so we don't impact the P&L.
So essentially what we have is initial posting here. So we keep it in application debtors, but posting directly to the P&L there. So it's just a movement between debtors accounts.
Yeah, because I think we take the view, if you raise an application, generally that doesn't change. That is the work done. You may have valuation that reduces the payment on it in that case, but the application is still the application and should get paid next time or when the work is agreed and completed. So everything's in balance all the way through. If the application does get reduced for some reason, then there'll be a nominal posting created for that negative adjustment of the application.
Yeah, Hannah makes a valid point as well about the control accounts being separate.
Yeah. Tony, the sales account that Matt's highlighted at the moment is a P&L account. So we're recognizing that revenue on application and posting it to the P&L. So in the period that you recognize that application, that's going to stay on the nominal and is not going to get touched. You've recognized your revenue, so your revenue and your costs will hit in that period and give you a profit for the month. And what we're not doing is reducing that out for any reason. The valuations have happened, retentions have been deducted, but your application is being recognised as your sales figure as work done on the P&L.
Yeah. So when we review that in the project side, what we have is some of the people might be familiar with the way that we display POP and SOP transactions now, but essentially we have a sales ledger application line. Okay, so we've got one here for application number 1. Okay, that is our £10,000. So as soon as that application goes on, we're recognizing that as actual on the project. We recognize it as actual on the P&L, and that's that £10,000 gross value on the project. Okay, the date of the application in the period ties up with what's posted to the P&L. Okay, what we can do is have a little plus here to drill down into that application and see what's happened. Okay, what the related transactions are. Do we have an invoice associated to it and certain things like that? Okay, so we can see there that we have an invoice and where that's the date of that invoice posting if we want to see that in more detail. But really what we're seeing is the application data. Okay. So if I did go into, so that essentially replaces how we view the application on the project inquiry screen. I think previously, again, there was too much noise. There was a lot of all the movements in and out.
A lot of postings. There's postings in there for the applications, the retentions, the valuations, the invoice. You'd end up with a whole bunch of stuff in there. But really, our feedback and our consensus of opinion in the end was you just want to see what's my revenue.
Yeah.
And whilst we're all interested in the other elements of it, you can go find them elsewhere if you need them. But essentially, from a project perspective, we've raised an application for £10,000. Please leave it alone, and leave it in the period it was raised in.
Yeah. So what we do have on the financial inquiry is a breakdown of those transactions, as Richard mentioned. Okay. So we do have when the application went on, and then we do have the final invoice posting.
Lovely, simple.
Yeah. Joey's just had a question
hopefully
there.
with those of you that are using our construction and project modules at the moment, hopefully that's enough for you to want to get upgraded anyway, just to avoid those unnecessary postings. So they still happen. They're just tucked away neatly in the background and kept out of the way. Sorry, Joey. It says, could you mix the valuation postings for a couple of my clients? You might have to You can talk. It's all right.
Yeah, I could. I'm just saying you could get rid of them for me or for a couple of my
The valuation
clients.
postings.
Yeah, exactly. Like just
I'm
application and invoice would be enough. I get that some people might want a posting on valuation, but a couple of my clients almost set up the same nominal code as application, so it just kind of goes in and out of the same nominal code, and it's flat. It kind of sits in WIP.
I probably should have put a Menti question up and asked, because actually, I mean, that's the purpose of this type of meeting. You know, I would suspect that most people are raising a valuation, putting a certificate on, and immediately raising an invoice. So that extra posting, those couple of nominals in the middle, is effectively irrelevant. Now, if your application is posted to 17 different P&L accounts, we're still only making one control account movement between the application and valuation. So it's never going to get big and busy. It's just going to be a single one. But I'm happy to take it out. As I say, we just wanted to go one step at a time, just in case somebody was using that as a control of things that may have been valued, but invoices hadn't been raised for some reason.
Yeah.
Then there was something obvious to show that.
I think you find, Joey, that those scenarios are when the application and certificate is done way before even finance find out about it, and they actually just get given the certificate value, and so they put on an application and certificate for the same amount and just get it on the system.
Yeah. Hannah was just asking, that all makes absolute sense, but spanner in the works is a customer doesn't recognize revenue until invoice. So Hannah, if you remember back in the settings for construction, you could choose invoice or application, and probably don't need to go through demonstrating it, but if you switch it over, it will force you to make your application sales a balance sheet account. I think now, Matt, doesn't it? So if you try and save this, you've now got to sort your nominal codes out. So the application is going to get posted off to the balance sheet. The invoice, if it's valuation nominals, then become P&L. So things will go off to the balance sheet until such time as you raise your valuation and you print your invoice and post it. And then, because the nominal codes are set up accordingly, at that point, they'll hit the P&L account, and that's your revenue recognition at that stage. So revenue recognition is really when is it going to hit the P&L? So does that make sense? So otherwise, things process through in much the same way. But as I say, HMRC suggests that you should be recognizing revenue when the work is done, and for, I would say, everybody in the construction industry, that is when you raise an application, because you are recognizing work done. There are various people who come up with various reasons why they don't do that, but that's why we've certainly had the default as recognizing revenue on application.
Yeah. So essentially, Hannah, what we have here is it's control account. So, you know, all on the balance sheet, just to balance it off to say what's our application debtors.
Okay, so we've got a bunch of questions here. Gross value now showing as actual cost for reporting. What happens with postings made for retentions? So I think a lot of those retention postings, because we split them, so £100 to make the numbers easy, £95 would have gone to the P&L as one posting, and then we had £5 for retention showing to give you a total. So we've basically flipped that over and gone, if you're going to post the £100 is so reporting becomes simpler. That's your revenue. The retention is just kept off in the background in a control account, so we know it's going to be collected. That's the important bit about the retention. It really doesn't have anything to do with your revenue and revenue recognition. It's purely about collecting it, unless for some reason the retention is written off on either sales or purchase side, in which case we'll post an adjustment to the project as well. So hopefully it makes reporting a lot easier as well. Yeah, Hannah, the value, the application would go on as committed onto the project.
Yeah,
until it's invoiced.
That's purely down to a display setting, Hannah, based on our projects, and that is whether we display retentions as actual and applications as actual.
Yeah. There's a note from Teresa on here as well. Our revenue recognition is when the work is done equals application equals invoice. So I assume you're literally raising the application, put the valuation on, and invoicing it all in one go. Teresa, is that generally what's happening?
Yeah.
Yeah. Okay. I mean, that's perfect if you could just put the whole lot on in one go. So someone's raised that application in a spreadsheet, they've got it agreed, you've got a certificate, and then the whole lot just gets processed. What we're allowing for here is someone raises an application. It may take a couple of weeks before it gets valued, even longer depending on the cycle for reviewing them. So it's really a matter of having that on your management accounts with the applications being raised and recognised, even though that invoice isn't likely to get raised maybe until the following month. So not everybody wants to do that, but there's certainly a lot of people who find that really useful. Yeah, so it's about timing really. So you can recognise revenue in a month for the application being raised, even though you're not going to get the invoice out or the valuation agreed until the following month. So you can make your accounts look appropriate for the month that the work was done in. All right.
Okay.
Hopefully we've explained it.
Okay, so I'm just going to go back to the project inquiry because that's going to sort of lead on to other bits. So I'm going to come back to doing some more applications just from really a different starting point, just to show you the options there. So what we have is on our all revenues, we do have our sales application there, and on our project totals tab, we store essentially that in its own applications area. Okay, so we can drill down to there and see it from our application or inquiry for what builds up that figure. Okay, or on our all revenue, and we can see that drill down and see when the invoices happened and all detail there. Okay, so what we also have on the inquiry is our total retentions. So we have our retentions tab to see our total, but we can also run essentially the whole applications ledger from within the project as well. Okay, so again, this is really down to preference. Out of my habit, I tend to load it from my construction menu, but a lot of people run that from here. Just a question from Gail there. Yes, yeah. So everything that you're seeing here from a customer side is essentially exactly the same on the purchase side, but flipped. Yeah, so it's the same process. I'll just take you through one, but we can see the customer and subcontract side is the exact same. Okay, so we can see here we've got in our applications, we can see our customer and we can see our subcontract. Okay, and we can see our history. Okay, I'm just going to take you to a project that has got some slightly more applications on it, just so I can kind of show you some of the benefits that we see from that application screen. Okay, so I load my applications here. We can start to see that I've got applications, valuations, some opening balances, some invoices and receipts in there. Okay, so what I can do is we can default order it by date. We've got a mix of it all together. I can use my filter to come in here and just say, well, I just want to see my applications. Okay, there you go. There's my history. I can see what I've totally applied for. Okay, I could then potentially go, right, I want to see my applications and invoices only, and that's going to give me more detail. So what people are finding is when you've got potentially 20, 30, 40, 50 applications on a project, specifically on the old application screen, some would disappear when they were complete, some would go into retentions only and not be displayed by default and go missing. What this gives us is sort of a nice list view of all our transactions. Okay, and what it gives you the ability to do is essentially pull out the data. Okay, so what a lot of people do is go, great, here's my applications ledger. I'm going to right click, export all to Excel, and view that data in a sort of a more detailed way, and then they can do with what they want. Okay.
I think the idea was to make it more like a sales ledger account. There's a tick box in the bottom corner that says show outstanding only. So if anyone is familiar with looking at sales ledger, is familiar with those type of concepts, and again show details to see the information.
Yeah, the big thing about the show details is what a lot of people don't realize is when you come to see this show details and against that application, it's going to tell me what certificates are allocated to it. So rather than just that sort of one-to-one application certificate process, here we have, well, I've got a certificate there that so valued at 26,000, and then we've got a second certificate that was also allocated against that value. Okay, so we can see more detail that that's there. Okay.
I think it's a big improvement on the old applications register. I think it's a nice way to work, but I think a lot of people have been reluctant to move across to it.
Yeah.
Just because they've got used to doing it the old way. You know, and here we've got a way of allowing you to split a receipt across multiple applications, but it's a bit fiddly.
Yeah. So what we have here is this is the older screen that we see. So automatically I can see that I'm missing application number 1. Okay, that's because by default I'm only looking at all of them. So I'm not presented with that information straight out the box. And what we have here is I've got 3 invoices there, but one of those invoices might also be shown on another application, and essentially I think it causes more confusion potentially than what we see on our applications ledger.
It was a good concept and a good start, and it gave us cumulative balances, which is what we were trying to achieve, particularly with the applications. But I think when it comes down to usability, I think having something more like this ledger makes everything very clear. You can see what's allocated to what, you know, you're processing your transactions on. So hopefully those of you that haven't tried using the customer application ledger can see there's some real benefits in switching over to that. We're not going to retire the old one just yet, are we, Matt? But there might come a time where we remove it, and you know, then you are obviously forcibly encouraged to go and use the new methods.
Yeah.
But hopefully, this should be better. That's the idea. You know, we've tried to rewrite things in a different way and not just leave it as it is, or try and patch it up and make it do the job, because that just doesn't really work.
Yeah. And what you'll find is some of the new features that we do have. So if I load in application number 3, so we've got a button here that we can now write off retention, rather than sort of releasing it and then not releasing it at the same time. We can quickly write off a retention from here. And this is where we start to introduce those new features into this customer application ledger screen. Okay, so it gives us the ability to do that. Whilst we're talking about write-off retention, and Richard mentioned it earlier, I sort of made a note to pick that up again, about how that's treated, obviously, because we're displaying it as a gross application value within the system. We essentially treat that as its own thing. Okay, so we want to see this is the gross value of the application, but if there's any change to that, we see why that's been reduced as its own line within the project. Okay, so from here we can see that retention has been written off.
I think it's very clear doing it that way.
Okay. So what we've seen so far is a kind of a number of different starting points. You know, some of the comments from Jerry about the way that his customers work and the way that, you know, I would say possibly the majority of people work is that the application is done potentially outside the system. You know, all the background work that's going to happen anyway. And really what we're doing is processing that application within finance. We're then potentially certifying it straight away, or actually when we receive the certificate. And having this as a starting point is potentially the majority. But what we've had, as Richard mentioned, when we started to introduce subcontract purchase orders and sales orders, is almost taking a step back from that application and going, okay, I now have a new starting point. Okay. So again, I'm gonna stick to the sales side at the moment, but I will go and look at the subcontract purchase orders because there is some slight differences between them. But what we can do from here is we can kind of build up essentially a contract of deliverable work. Okay, so we can come in here and create a sales order for a project. Okay, so here I've got a sales order for £400,000. There's a number of agreed deliverable lines on there that essentially we are going to deliver. Okay, and within that we can have different types of transactions. So I can have stock. So we can integrate with stage stock, and we can essentially sell that stock out the system via applications, deliverables. We can then have free text, and then within that free text, so typically if you use the sales order within Sage, everything has to have a quantity. Okay, so 1 of something or 200 of something. When we come into construction, we come into more of the concept of measurable works. Okay, so if I wanted to add a new line on here, we can see that I can use standard items from my Sage product list, or I can have a free text item, and that's either going to be classed as free text stock, so anything that's essentially got a quantity, or we can just have that as measured works, and we're based on a percentage complete of that. So it's a flat figure where we essentially apply for a percentage, or we deliver a percentage of that work. Okay. So there are certain other things in here. We can do picking lists, dispatch notes. We could create a back-to-back Sage purchase order, so not a subcontract purchase order within our system. This is going to back-to-back orders for stock that we can relate in there. We can have associated costs, but on the basics is it allows us to build out a structure to draw down applications from. Okay. So in order to apply for something on a sales order, we essentially have to dispatch it. So very similar to, again, to a Sage sales order, we put a sales order on, it has to be dispatched, and then it's invoiced. Okay, so we do something similar. So again, we can see here for stock lines, we've got quantities, but for those measured works, we have to say how much complete that is. Okay. We can then see some further details. So again, we said we could record cost on there. So are we making any margins on our
margin
lines?
On that project? Man,
Yeah,
I like that
and then we can actually see what's been applied for so far. Okay, so at the moment we've got no applications on the system. So what I can do is from my sales order itself, I can go and create an application. Okay, and what that's going to do is present me with my sales order, and then from here I can go, okay, I can essentially work down and go, this is what I'm going to apply for. So we can build this contract up from the get-go, and then that alleviates some of the entry methods that we have further down the line when applications are being entered. Okay. So it could be that I'm going to ask for a quantity of 300 for them. That's what I'm applying for this time. We've got 1,000 of those. Say 4,000 of that, and then 600. Let's put some, let's not make everything a round digit. There we go. Okay, so what that's going to do is that's going to say, well, we're going down that sales order, and then this is the amount that we're going to apply for. Okay, so I can come and create my application, and that system is just saying application amount for this will be created. Do I wish to continue? And then at the point that it's doing now is saying, when's that application going to be? Okay, and again, this is the key point, because this is essentially the date that drives that nominal posting. Okay, so I can come in here and say, okay, I'll go and create that on the 7th. What that will do is that will go away and create me an application. Okay, so what we have now.
It's a shame you can't hear them, Matt. They're all really going, ooh, that's interesting.
I don't know, someone looks like they've left their seat, so I'll leave that.
Paul's left his camera on. Okay. Yeah. Got make a cup of tea.
So what we have here is now pre-filled in data based on the nominal on our sales order. We've got our multiple lines. So again, as Richard was saying, this allows us to post to multiple revenue or cost codes. So essentially it's the same on the purchase side. And it kind of means we don't have to retype everything in. So we can go and build that sales order from the get-go. Okay. obviously that's a lot of entry to begin with in terms of keying that in. So what a lot of people do, or what I did this morning, was to import that. So I can import a sales order as a template, and then that creates my sales order, and from there I can just draw down, okay, and create applications.
Yeah, the nice thing on the application is when you get a sales order tab on the application. Yep. So it shows you everything that you picked at that particular point from the sales order as well. So you can then use that information for printing an application document, which is much more relevant when it's done from a sales order.
Correct. So if I can print my application from here, wait for that to load, we can start to see now we've got order number, order detail information, what order that relates to, what the date it was, the quantities and values that have been applied for. Okay.
Obviously, you'd have better description other than stock item for application. You know, it would be your stock code or stock description and the labor. Yeah, the description of the labor work that you're carrying out. As correct. To just generic headings.
You know, this is essentially then building on something that potentially the QS is going to provide. This is actually what I'm applying for. This is the agreed work, and this is the percentage that we're applying for. This is the quantity that we're applying for. Okay. So, and as Richard alluded to, so we've got some people that have added backing documents to this. So it's got the total cumulative of the order and certain things like that. Okay. So that allows us to put in that application, and then that application is onto the system there waiting to be applied for. Okay. So one of the key questions that we often get asked is, whilst I load up this, is, well, in those instances, how do we deal with variations? Okay, because variations are going to come in on every project pretty much, you know, especially in the construction world, or what we perceive to be a variation. Okay, so we can see here that we've got our sales order application on there, and again, it's kind of the way that the system is designed for you to treat that in a way that, you know, that suits you best. Okay, so typically what people tend to do is to create a new sales order for that variation. Okay, so we've got a variation in contract. It might be that variation is justification for a new contract or something along those lines, but it's under the same project, it's the same customer. Okay, so what I have here is a variation order. Okay, so again, nice big description of variation line, but essentially we've added a variation within the sales order itself.
There's a lot of room for text in there. I think it's something like 68,000 characters, so you should be right for description. And you can obviously put multiple lines. You put comment lines in there as well, can't you? So
4 pages of A4, I think you can take. So, anyway, so but what we can do with the multiple sales order is, at the moment, we can highlight the line and go and create my sales order as I took you through. What we get is on the menu, we can come and create the application from here and create my sales order. You're absolutely right. You can have negative variations on that, Hannah. So adjustments, contras, that sort of thing. Okay.
And the import templates, as always, when you go to the import screen, the templates are always in our import screens.
Yeah.
Yeah, perfect.
Oh, I didn't see that question. So what we can do now is we've got our sales order number. So really we've been driven by the project, okay? And we can go and create a cross sales order application because it all sits within the same project. Okay, so we're using the project as the driver to control those. So we can run multiple contracts, multiple variations, multiple sales orders, all under the same project and apply across both. Okay, so one of the also things that I'd like to point out is when we go to create one now, so I could say, let's go bit of that sales order and we're going to charge for our variation, but there's been a change within potentially some of the lines that we previously applied for. So here I previously applied for 300, but when I made that application, there was a slight mistake. So I can come in here and I can reduce that quantity down. Okay, and what that's going to do is that's going to create me a negative line for that adjustment on the application. but then go and create me further lines for these. Okay, so they're going to contra each other off, but so it's going to essentially create a negative application, which, you know, I might come and apply for these 150 later on down the line. But what it's doing is it's putting it back on the sales order. It's giving us a history of what's been applied, what the adjustments are, and what's been made that way. Okay.
They're cheering, Matt. I can hear them.
Silence. At least we're getting questions, Richard. That's the main thing. So what we have here is we now have that negative line. Okay, so if I look at my sales order lines, you know, we've got a minus 150 now. I look at my accumulations, I can start to see the build up of my applications overall. Okay, so it's really using that sales order to drive what's been applied for. You know, it could be that. So what the experience of this negative one is, they might have applied for 300 of something in application number 1, but you know what we're doing is we're going, well, we're not paying for that now because you've not finished the work, so we'll take it off the next application, and then when we're ready to pay you for it, we'll then go and make a new application for it. So it could that it sits there waiting to be certified as an open on the application, or we take it off using a negative on the application and reapplying it again. Okay, you can use exactly the same concept if you didn't use the construction sales orders, if you just put in a negative application to make an adjustment. And that gives us our essentially our audit. So for that question, Tony, sorry, I was just reading Tony's question there. It's a valid point. So in that instance where we've got variations, I suppose we're potentially less reliant on the system calculating that for us, because the system's going to be working on that assumption that the retention is going to be 5% of that. Okay, but if we weren't doing it on the 4,000 variation, we were just doing it on this, under my deductions, I can just come and type in the retention that I wanted on that application, and it's going to adjust accordingly. Okay, so bear in mind that it's that value that gets posted to the P&L. The retention is really there just to keep the application debtors and retention debtors separate, and for it to be released later. Okay, so when it does get released, there's no reposting to the P&L. It just does a movement at retention debtors into the sales invoice.
It's an interesting point. I don't think I've ever picked up that anyone didn't have retention on variations before, but I have made a note. Maybe that's something we could think about for the future.
Yeah.
Right, Matt, I think we've been on for an hour and 20 minutes.
Yeah.
I think maybe a 5-minute comfort break for everybody. Grab a coffee.
Yeah.
And then we can carry on.
Good.
Okay.
So perfect.
See you back in 5.
See you back in 5.
Back. Any feedback from anybody? Anybody want to pop on and have a little chat for a couple of minutes? Is it useful? Anybody there?
Yeah, it's good to see you've streamlined the nominals. It was getting pretty busy when you were trying to explain what it was doing to people. I assure you it works, and here's 40 nominal postings to prove it. But yeah, no, it's good.
It's yeah, you engineer these things. You're trying to make sure that everything's being caught, but then you realise, oh my god, that's just hard work to reconcile. So yeah, trying to simplify things back. And Miranda, I think we're all worried about Paul. He's just not there. He's just his camera's on, but he's disappeared. But hopefully these things are good. Maybe we'll have to have a little bit of a comment from everybody later. Should have done a Mentimeter thing, Matt, shouldn't I? So we could actually get some voting going on. But I think it's pretty good. It's pretty concise. Just while we're waiting for people have a few more minutes to come back from getting their cups of tea. Variations is an interesting one, isn't it? Because if you don't have sales orders and you're not raising a variation sales order, there's a number of ways you can really deal with them. You can put them in a different phase, stage, or activity within the project. But that can sometimes make processing more difficult, because if you put an invoice on against them, then you've got to split that between the different phases, stages, and activities, and that can be tricky. If someone sends in an invoice, let's just say you're laying 50 meters of road, and actually there's been a change, and now it's 75 meters of road. So you're just getting an invoice for 75 meters of tarmac being laid, and then someone in finance has got to try and work out how to split that from a cost side, particularly. Then that can start to get quite complicated. So to try and make it simpler for people in that scenario, you can create your variations as a simple list in the project, and then we allow you to go and amend the budget on the project. So when you amend a project, you've obviously got to put a reason in. We keep the original budget, but when you amend a budget, you got a reason. And one of the reasons can be a variation, and then you can pick one of the variations from the list to say which one it was, and that's the reason why you're changing the budget. So you keep your overall costing and processing and everything really nice and simple, but still dealing with the fact that you've got a log of the variations that have been agreed and put into the system. So it is trying to deal with how different people want to work and accommodate all those different nuances, and there seems to be quite a lot.
I think we see it less so. I think when we first started, Richard, it was we do it this way. No, we do it this way.
Yeah, I think we're in a better place. Well, we are in a better place for sure now, where we can say actually best practice says this is how you should be doing it. We can accommodate a bit of flexibility in a certain amount, but we won't just listen to everybody and try and accommodate immediately what they want without drilling into it a long way to see, are we missing something, or is it just a terminology thing? So what's next, Matt?
I was going to briefly show, I just realised how quickly we're running out of time. We've probably only got about half an hour left, haven't we? So I was going to just quickly show subcontract side really briefly, mainly because it's exactly the same as sales. It's just the flip. The only real difference is so when we're looking at a subcontract PO, we're doing less with stock delivery. We only really do our free text, so we can't have standard items, so it's free text, stock, or measured works. Okay, because we're presuming that a lot of this subcontract side, if they are delivering material work, it is direct to site, and it's to be used within that whole contract. Okay, so in terms of that side, it's free text lines. We aren't then forced into doing the delivery of or the receipt of those goods, so we can essentially automatically receive that subcontract PO. But in terms of the concept of drilling down and applying for that, it's exactly the same, but in the subcontract application, we do have a cumulative column, and we can record just the cumulative value that's being recorded. Okay, so rather than going, this is what I'm going to apply for this time, we're essentially processing an application directly onto a PO to say what we can either do it for that value, or what's the cumulative applied for. I still can't say the word, even though I've said it about 400 times today. And the reason for that is really just because it's dependent on what kind of documentation we get from the subcontractor. as we know, it could be just different every time.
Sometimes it's just an invoice for the work done, isn't it? And sometimes they raise a proper application, but not all subbies are that technical, are they?
No, and sometimes it could be a self-bill. You know, this is what we're going to essentially pay you off this order this time, and that whole self-bill concept. So when it comes to the application side for that, again, we've got application or supplier application. So we're pushing everyone towards this application ledger. Can't remember what project it was on, project number 3. So this time what we're going to have is on our supplier applications ledger, we're going to have potentially, it's all project based, but this time it could be multiple suppliers. Okay, so rather than that kind of, well, in theory, you could have multiple customers against a project that's more likely to be on the supplier side. But as you can see, we're seeing exactly the same information in this screen as we would do on the customer side. Okay, so we still have our application entry, and this time we can see from the purchase order line what's been applied for. Okay, but all the other information is exactly the same. Yeah, retention can be controlled from the project. Retentions can be controlled from here as well. The only addition we have on the deduction side is when we start to think about CIS. Okay, so as Richard mentioned, CIS has been around, what did you say, 2011? So quite a long time.
A long time.
We don't change it. We try not to change it. It does what it does. But we can see here that what we're saying is how much of this application is labor. So for me, the way that I've got my CIS set up, which is the way that kind of I recommend to do it, other people recommend it another way, but mine's based on the nominal code, because the likelihood is you're going to say this is where the labor gets costed to, this is where the materials get costed to, and that's defining what the split is. Okay, and I can add retention on here.
Just on that point, as we've got quite a good audience on here, I think it's just worth mentioning. So for some people, they cost their entire project cost if it's a build of a new site or a new power station or something. Some of them we've seen, they cost everything to a single nominal code on the balance sheet. And then, of course, our nominal code for labour doesn't work. So in that scenario, you switch it over to use the percentage from the actual supplier account, and then you get the figures at the bottom. Will enable you just to type in basically what the what the CIS deduction is, and that's normally taken from the supplier's document because they're giving you that information anyway.
Yeah, it'd be interesting to know everyone's approach, because there's the approach of post everything to the P&L and take the WIP out, or post everything to a WIP and put it in.
Yeah,
there's really two schools of thought there, isn't there?
Discussion for another day.
Big construction WIP. But then we'd definitely need Mentimeter then, wouldn't we?
Yeah.
But essentially the concept's the same. So for here, it's where that gets essentially posted to. We see the same posting rules. We still create an application, but this time when we create the invoice is then going to create a credit note for that deduction, and then that will be available to pay within your normal suggested payments and payment run as a supplier invoice. Okay, so it's only when the valuation is posted as an invoice that then it becomes available. Otherwise, it's a application, it's a certificate, and then it's an invoice. Okay, so from here, when we're printing a certificate and posting the invoice, and again, this kind of revolves around whether it's a self-bill or whether it's an invoice, is when we're recording the valuation, we can essentially record an invoice number or a certificate number, depending on whether it's self-billed, and then that will be then generated when we post that invoice on. You kind of mentioned a little bit about WAP earlier, Richard, didn't you? About the approvals.
Yeah.
So essentially, what we're doing on the the supplier application side is we can send those applications and certificates to be approved. So this is, it's out a guy on site saying, yes, this is what is being certified on that application, and then it coming back as approved, ready to be posted within the system.
Or if he's reducing the value, he'll obviously put he's forced to put a reason in there in a description, so that when we come back, whoever's in finance can print that certificate with the relevant valuation text in there to then send out.
Yeah. And I think really that depends on, a lot of this also depends on where that application gets delivered to. Okay. Does it get delivered to the QS and they say this is the certified value and then they send in an invoice? Or does it get delivered to finance, they log it, it then has to go out for approval or certification and back in again? Okay, so there's lots of different sort of scenarios that the system will allow us to fall into.
My preference would always be to get those applications logged in the system before they go to a QS.
Yep.
Not everybody wants to do that for their own various reasons, but we allow for, if it goes out on paper, well, it doesn't hit the system. But I always think it's better to log it. It's not going on the purchase ledger. It's not going to get paid, but at least it's on there. So if someone chases up, what's the score with it, you can see, well, I've logged it, and at that point, generally, you're going to flag who it's going to go to for approval as well, or for valuation.
Yeah, correct. Okay. And again, I'm going to jump back to sort of projects now, just to sort of look at the way that the orders have an impact on the project rather than just the applications themselves. So if I go and look at our project number 3 and go and open my project inquiry. Okay. So because we have an order on the system, and again, we will treat it in exactly the same way as we would do potentially a PO or a Sage PO, not a construction or subcontract purchase order, is it just gives us a committed cost on that project. Okay, so as we come to look at the costs here, we have our standard Sage POs, but we also have our POP construction line. And essentially what we're going to be doing is when we come down from there, so that commitment is going to move into an application cost.
Was just a question about attaching documents to a project for backup. There's an attachments folder.
Yeah, I don't have documents installed on this environment.
No, but when you're in just amend the project, you've got an attachments folder. So standard Sage attachments, you can put them in. If you have Sicon documents, then you can categorize your attachments into as many different types as you like, and link them up. Yeah. So depending on how technical you want to get.
Yeah, specifically on the subcontract side, you can then attach it to the application and certain things as well. So again, so we can see here that we had a unit of 1, so it's measured works. So project still falls into that sort of Sage habit of having a quantity, but behind the background, we know what the unit value is and what's outstanding on that construction order, and what's remaining in the measured works, and then we've got our application. Okay, so we still don't lose that concept of what's a committed on the project and what's an actual. Okay, and we do have the same on the sales side as well. We can see here that I've got a committed revenue, and as we draw down from that on the sales order of our applications, that will come back as an application itself. Okay, so we can see here all the independent lines as a commitment. We can see here that some are complete, but because they've turned into applications themselves. Okay.
The certificates don't. Funnily enough, we have that the Sage attachment folder isn't very helpful. You just end up with a million attachments in there. I think if you've got Sicon documents, we do have a distribution module in there now. So if you generated the application through that, then we would attach it and any supporting documents. But we could certainly grab certificate, couldn't we, Matt, as well, and attach that to the invoice in documents. Yep. I don't think we do that at the moment, but that's certainly the intention for us creating that module in the first place, in the Sicon documents.
Yeah. so that kind of sort of rounds off that sales order. As I said, we didn't really have enough time to go into every minute detail, but it's to give you an idea that this stuff is there, available in the product if you want to use it. You know, it might be that it doesn't suit your process, but it's kind of there, and it's where that starting point is. Do we start from a sales order? Do we start from a purchase order? Or do we get just given the application details and we log that and process it from there? Okay. Okay. So the next bit I want to just touch on really is to remind everyone CIS and RCT are there within the software. Okay. So CIS is, again, as Richard mentioned, we can do it in a couple of ways, whether it's based on nominal code, whether it's based on a prompt to say how much of this invoice is percentage based on labor and material. We've obviously got the direct link to HMRC, and we can submit our returns on a monthly basis. You know, there's not really a lot more to say. You know, most people that you speak to that deal with CIS probably know more about CIS than you do yourself. It kind of does what it does. Yeah. RCT, so again, that's specific for our Irish customers out there. So this is anyone that falls under the sort of Republic of Ireland, or ROS as we refer to it, scheme, and submitting. That works slightly different to CIS. So CIS, we do a monthly submission of our CIS. ROS is submitted on payment. So as soon as you pay them, that's when we have to talk to ROS and tell them how much is being paid, whether there's any deduction, and that deduction is calculated at the point of payment. So it could be that they start the project on at 20%, and then throughout the project, as they're paying bits, it might reduce down to 0, which means they're not making any deductions anymore. So
in some ways, it's a slightly better way to do it, because you don't end up with a situation where you've got a rate that you're using and it's out of date, and you end up with a problem to deal with later. It's literally done real time. So you say what you're going to pay, and they go deduct 30% from them because they are late with their other taxes somewhere else. So it's interesting. Anyway, and there's not many of you are probably not even interested in RCT, but it's there if you need it.
It's there, yeah, exactly. The only thing is there's no 19th deadline. It's just done when you pay them, which is also seems like a more sensible concept. Okay, so moving on to sort of more of the project side. So we talked about the sort of construction elements, but there's certain things in projects that could potentially help us or help you and the way that you set up and do your reporting. Okay, so everything that I've been doing at the moment is really based on a sort of a flat level project. So here's our project, and then within a project we have the concept of project headers and how they are used. So generally when you get the system installed, there is a default set of project headers. So expense, haulage, labor, material, plant, and really it's just a way of categorizing where the cost and potentially revenue sit. Okay, so some people you talk to and they want a real detailed breakdown of exactly where those costs are going, but their revenue, they just want it to show as revenue. Okay, or you might have others where they essentially tie in every cost that they bill back to its relative revenue code, so they can get a margin on a header by header level. Okay, and I think that's a sort of a fair concept that you're kind of seeing more and more of. Actually, rather than just saying revenue is revenue, they want to go, well, I'm applying for material revenue, so that's what I want to see. Okay, and what they're actually doing is classing the way that they'll have a material revenue code, but they're using these project headers to tie them together. So when you're reporting on a project header type level, you can go and look at material, and it gives you a essentially a profit margin on that. Okay, so it might be that targets a hit on material margins or labor margins. You might expect a higher labor margin or a lower, and you need to hit those targets on the project. And it's just a way of thinking about how we can use project headers for that kind of reporting. We don't want to just see where the cost is. We want to see those minute details of the profitability on the project itself. Okay, so it's always a good idea to think about how you use those project headers and how that can support management accounts, project reporting, and certain things like that. Okay, bear in mind that that's also potentially the driver for where it ends up in the finance system in terms of the nominal code and other areas. Okay, I think the next bit I'm going to talk about is sort of phases, stages, and activities, and also how that's used and how that's categorized for the work. And I think there's often a lot of confusion between a project header and a phase stage activity and how they can work together. Okay, a project header is designed to be the type of cost. Okay, and it's not really supposed to be a one-to-one of the way that the phase stage activity works. The phase stage activity is supposed to be a breakdown of a project. Yeah, so you don't want to say this is a material activity and only the material project header can be classed as that, because you've already got that categorization. Okay, if you think about it as almost a grid, you want the project at the top level, how you want that project broken down into different cost categories or revenue categories, or even just categories. Don't think about cost or revenue. Okay, so I'm just going to load a little example here of one of my projects that I've got, and it's kind of like a bit more of a I don't want to say house, but a structure. Okay, so you're going to have the substructure, so foundations. Then you might have some outside utilities that need to plug into that building, and then you might have the superstructure as in the main carcass of the body, and you might follow that on with fittings and furnishings and some other things as well. But it's how you break down those project levels. So if I just look at the substructure, what that breaks down into. So it could be that, yes, we're building the foundations. Okay, what to build those foundations, what needs to be done? It's excavation, shoring, it's piling, it's concrete masonry. We're not saying to build that substructure, we just need materials and labor and other categorization. It's how we can use these project levels to categorize that. Okay, the likelihood is the QSs are reporting in this way already, and it's how we can reflect it within the project itself and how that can be used. Okay. I also think some people then look at this and go, yes, I can do lots and lots of different categorization of a project, but then they end up making it overcomplicated.
Yeah, you still got to post a transaction against it. So if it's an invoice or a purchase order or something else, you've got to then pick out all the little tiny elements. So it's just trying to get that balance, isn't it, between enough detail and not too much admin.
Yeah, so it might be that the QS is going, yeah, I want all this detail, and then you'll find that the purchasing team are making mistakes because they don't know exactly where one subcontractor's invoice has come in because it's come in on a scrap of paper or something along those lines. And it's that balance between how much detail will we have, data integrity in terms of categorizing it in the right place, and just the fact that they have to go to project number 5. They have to remember that it's a substructure invoice, that it's excavation and shoring, and it's to do with stabilizing the ground. Yeah, so it's that
there are some shortcuts. You can go straight, you can type in, if you knew what it was, stabilizing or ground, and it will just go search for those things in the activity level, so you can speed it up.
Yeah,
but it's still you don't want to overcomplicate the structures, but the structures are great for those people that need them.
Yep. One of the new things that I did just want to show was another wow moment or whatever or silence, is just how we've sort of adapted to these project levels on creation. Sorry, a start date. So that's going to create me a project. So previously, when you create a project, it just comes with an activity 0. And if you needed something a little bit more complex, the likelihood is you would have made that project from a template. So you don't have to go and rekey that project in every time, or the structure in every time, and certain things like that. What we've added in is when we're entering a project now is this build project levels, and hopefully this can speed up and allow you to manipulate the way that the level building goes. So it could be that I still go and copy that from a template. Okay, we might have a template with all the structures that you might have, or it could be that you go, all right, I know I have a project with a structure that I want to copy. Okay, what it's going to do is it's going to load up that here and go, oh, for this project, I'm just doing the foundation work, and that's all that I need to categorize in. And I can essentially just copy that in to my new project, and that's built my structure. Yep.
Oh, that's definitely a good old round of applause.
So,
I think that one as well. There are some people who don't have templates, but they have got projects and they're similar projects. They can go and pick something from another project and bring it in.
Yeah,
it builds up obviously over time, but building templates seems to be a bit of a challenge for people getting ahead of the game. But there are people who are using them, finding them helpful.
Yeah. So this is just another way to do it, and you know we always get, I just want to copy that project, I want that clone. Well, now we can do that in 22 going forward. Okay. Okay. Cost of completion. So we do have, everyone I talk to, they do a cost of completion. Okay. And often it is in a spreadsheet, or you know they try and it's a meeting between finance and QSs, and they have their own defined process, and it's kind of very manual, I suppose is the best way to say it. There is a cost of completion process built within projects. So I'm gonna lightly touch on that, but I think it's kind of more of a potential open discussion. Is this concept too far? Is it we're not doing enough? You know, can we simplify it, or something along those lines? So this is one of the areas that we'd really love feedback on, I think.
Lots of people to really start using it. I think the purpose is at the end of the month, I would imagine most of you on projects go through each of your project headers and the structure of the project and go, okay, where are we now going to finish? You know, are we going to finish under budget? Are we going to, well, apart from being on time, but in terms of cost, are we now estimating we're going to go over budget, under budget on revenue? Have we got more we can build than we expected to, et cetera, et cetera? So you can go into each of them and you can review those projects, and then it'll give you some indications back on the screen where you perhaps have some problems arising.
Yeah. So I'm going to load the cost to complete. Actually, before I do that, I just need to check where my costs are. But again, this is built on the phase stage activity structure. So it's presuming that when you do your cost to complete, that you are doing a cost to complete at each level. Okay, where are we at this level with labour and materials? Where are we at field ground labour and materials, giving us a total picture of the project? Okay.
I suppose that actually gives a good concept of why you would use a phase stage activity, isn't it? Somewhere that you want to review those costs.
Yeah.
It's significant enough.
Yeah. Yeah. And it's, you know, you use the project headers for the type of cost, but you use the phase stage activities of where within the project you are. Okay. So here I've got some costs against my project, and that is 2011. So this is Richard saying we can go straight to the activity if we know that, and that's going to back select everything. Okay. But essentially what we have in this cost of completion screen is a way of forecasting where our costs are going to be. Okay. So we've got some budgets in here. Okay, so we've got a budget for labour, and we've got some actual costs against the project itself. But at the moment, we haven't really done anything with this cost of completion. Okay, so the first thing that we tend to say is once you've got your budget in the system, so it's really driven off doing budgets against projects. You know, I'm aware that not everyone does, but it's in there. So the first thing we tend to say is the first time you run cost of completion is you set it to budget. Okay, so what this is going to tell me is my cost of complete, the labour element of this is going to, at completion, cost me 21,875. So that's my cost of completion. Okay, where I have a zero budget for here, my cost of completion has already cost me something. Okay, so what I can actually do here is in this review for my cost of completion is go, well, I need to go and update that cost of complete to be what I expect it to be after the end of the month. So it could be that my cost of completion is zero. Okay, so I'm not expecting any more cost on there, but what it does is it gives me a forecast of where my costs are going to be at the end of the project. Okay, if I'm going to expect more material within my specific phase, stage and activity, I can go and say, well, I'm going to expect another £500 more on that. That's going to increase my forecast by a by this value and the actual costs. Okay, it's going to give me a variance back to what my original budget was. So for example, if I knew I was going to expect more labour on here and I set that at 22,000, that's going to give me a variance. Because I'm making a change, we have to give a reason for change. And then I can also give this specific project, phase, stage and activity a percentage complete. So I can say I'm actually 50% of the way through there. I've already spent some value. Okay, I do have what my cost of completion is at the end. It's going to give me a forecast at total costs, and potentially I can then accrue for them some of those costs based on my forecast.
You can get clever and put a profile in for them, but we're running out of time.
Yeah, I know. I just saw the 5-minute warning.
Yeah, so the idea being you're saying I'm 50% through, wherever your costs are up to, you know, it's then expecting you said, well, I'm going to end up on 22. So therefore it knows we need to do some accruals. So these costs to complete can then roll up into a CVR inquiry, and then we can start doing some work in there to really try and work out what your sales WIP is, to give you get a month, a period, a year to date, and a project ever screen that gives you a summary of each of the projects. So I think there's still a lot more that we could do in that cost to complete CVR and kind of management accounts that effectively drop out at the end of that CVR process. There's still a lot of people suggesting lots of different ways of doing it and the way that they do it. So I think we've got a bit more work to do, but I think we've got the infrastructure and the framework there to support that, and the process is to capture on a period by period basis those cost to complete changes. You know, what people have said in 1 month, does that follow on for the following month? And we've got some big variations going up and down all over the place.
So this is just an example of the CVR that it feeds into. So it gives us our year-to-date figures, our period figures, our totals, and then what our total cost to complete for that project is going to be.
So I suppose, Matt, just for the last few minutes, I suppose we ought to just make people aware that we have a few other things in the projects now, because if they've had an upgrade and someone hasn't put their new features on, it's possible they've missed them. So things in projects, particularly like planned purchases, is one area. So you can build up a list of purchases that you expect to make on a project and the prices you expect to pay for them. You can then go in and designate suppliers for them and raise POs from them, and then track those variances as you go through the project.
Yeah,
and
that also integrates with purchase WAP, so you can essentially convert a planned purchase into a purchase requisition into a PO and follow it on from there. You can also use that to create your budgets. Plant hire.
That little menu option there has replaced Inspire on numerous sites. So it's a great way of raising hire orders for hiring items in. We've also got methods in there for setting up your own plant so that you can effectively use that and cost that out onto projects. So you can distinguish between stuff that you're hiring in and stuff that is your own and you're just using it on the project and costing it in. And raising the POs and raising a PO that effectively give you the minimum period of 1 week's hire, and then rolling those orders on, so you can keep an eye on the outstanding orders that you have for the hire asset. So you're making sure that you're returning stuff as soon as possible, so you're not incurring extra costs on the projects.
Yeah, I did have one as an example, but
you've got to go and have to find it now. But
you
get the idea. It's more important that you know it's there. You may also have noticed that there's a project management at the header where Matt's just clicked. There's a project management option there, and there's another one in the menu. And what we've been trying to do with the product is to give you more project management ability. So you can get right down to creating what we call operations and start scheduling them for particular people. Again, that's in quite specific circumstances. But I think the project management side of things, Matt, if you go to the project management inquiry, or are you in it?
No, I'm just in the other one.
So we've split these up because we did it with too many tabs in the project inquiry. So there's still a standard project inquiry. There's a financial inquiry that is much more relevant for invoices and periods for finance people. Again, that should be a relief for, some of the people that are on early versions where they're still struggling with purchase orders and trying to pick up periods from those compared to invoices. The separate screen makes that much easier. But the project management one is really aimed at us trying to build tools for project managers to run the projects as well. So in here, there are summaries of work items to be completed. So you can build up a list of here of things that need to be done on a project, and then you can track them and see who they're assigned to and keep your progress on them. Relatively comprehensive with checklists and attachments and histories and tracking notes, or if you like a story behind what's going on. There's quite a lot that you can do inside of these each of these lists, and we've broken them up into issues or requests for change, or again you'd call that variations. So there's a lot of stuff in here. There's a list of objectives. There's a place to put notes. You can categorize the notes into different types of headings, attachments. So there's a lot that can be done inside of a project outside of just costing it now, and there'll be more to come on that front as well.
We can now budget by hours on a month-by-month basis. We can potentially see how much labor hours you've got versus what your capacity is, sort of rough cut.
Yeah, it's a rough cut, isn't it? It's to try and work out what you've got scheduled out to the future and what labor you've actually got.
Yes, based on a header and a budget on a period-by-period basis. Because
quite a powerful tool if you're using it. Now that one is, I think we've kind of done a little shortcut for that one. I've gone, well, we've got £50,000 worth of labour, and my hourly rate is this, and it works out then how many hours you need, or you could just put in the hours and it'll work out the rate for you, and that then feeds back into this.
The budget is based on how many hours required per month, so on a month-by-month budget and a cost. The labour available is calculated based on teams, so we can associate the labour project header to a team, and then that team has employees, and that employee number is times by the number of hours in a day. So rough cut, we don't really know. And then we can predict when people have got holidays in. So if they're booked holiday through WAP, it's pre-populated a timesheet, we can say that we've actually got 40 hours less that month.
It's an interesting start.
Yes.
How many people will go that far and want to use that sort of thing? We will see. But we're listening to requests for new features and trying to implement in a way that hopefully some people can make use of. Okay. So we had left a little space for Q&A. I think there's Hannah saying she's implemented Hire in a couple of sites and it works really well. So thanks for that. Anything else from anybody else? That questions? Did you like it? Does it seem to tick the box?
You want more of these sessions? Is it
Feel free
useful?
to talk. Feel free to talk. I know a lot of you. Yes, more sessions. Okay.
Yeah, that's good. We've had a handful of prospects that have, when we've talked to them, they've had some pretty high expectations of what we could do in terms of bill of quantities, quotes, and estimates. When we've showed them what's there in estimates and budgets, it's not really blown their skirts up. Any chance to have some improvements around that area in roadmap?
Yeah, of course.
I think it's mostly down to data entry. I think that you get somebody who's used to putting it in a spreadsheet, and then you say, right, well, you put this budget against this cost header, and then you go this budget, and you can. I know you can import them, but they still seem to glaze over and want more.
Well,
They want a full bill of quants, really, is what a lot of people want.
Quick answer to the question. It's being recorded, and we'll send you a link for the recording. So that's happening. Joe, I don't know whether you saw distribution yesterday, but you can literally copy and paste. So you get a spreadsheet with a bunch of columns on it. You copy and paste it straight onto the screen. So we've got some tech for that now. Maybe for the bill of quantities, we could allow you to do that. Because
potentially. I was
spreadsheet, haven't they?
Impressed by that. So if that tech could be expanded to other areas, that's the potential for that. That sounds good, Richard. Cheers.
Yeah, let's have some details of what people would like. I think we've spoken about it, but maybe how we've implemented it a little bit too slow and cumbersome for them. Okay, more sessions. Seems to be great. That's the general feedback. Thank you very much.
Yeah, looks like more sessions is quite popular. So
yeah, I think it's probably going to be a couple of years for now, unless we've got something specific we need to tell you about. But I think if it's okay, in the past we've always gone to the business partners and relied on the business partners to contact our end users. But I think allowing end users to join these things and have a voice and have a say and understand why we've done some of these things, I think is quite valuable. So thank you for sparing the time. Really appreciate it. Is that another question that we need to answer? Hang on.
No. The session on budgets and the usual
Stuff. Yeah. Great. So again, thanks for your time. Thanks for coming to listen to us, which are on, and speak to you soon. Bye for now.
Thanks all. Bye.
Bye.